Hello everyone, and welcome to this presentation of how to trade pullbacks in volatile markets. Now, pullbacks is a very popular way to trade, but in my opinion, in my nearly 4 decades of trading, I have found that most people trade them incorrectly. And I'm going to show you the correct way, in my opinion, of how to trade pullbacks with a very simple and very easy method to apply. For example, if we look at this first chart here in Apple, this is a current chart of Apple going back just a little over a month ago. Someone would look at this and say, well, Steve, there's really some resistance up here. In fact, the guys I follow in the chat room say that this is where all the majority investors as well as the institutions are selling. So this is really some type of a top, and I would not look to buy unless we broke out. And more likely, it's probably going lower to make new lows. Well, with the technique I'm going to be sharing with you today, you'll be able to generate buy signals just based off this bar alone, and hopefully you'll be able to hold on to your position long enough to reap some really nice profits. And if you miss that, don't worry, because another signal was generated right here as Apple continued to go up this week. And in fact, I believe this chart was taken up until last week. If you look at what Apple has done today, the stock has gone even higher. So welcome once again. This promises to be a great presentation. My name is Steven Primo. I am the president and founder of Specialist Trading. If you're new to my presentations, you'll find out, especially today, that we're all about educating you. It's my opinion that the reason why most traders fail is because you're basically taking yourself out of the game. You're relying on someone or something else to tell you how to trade. I mean, think of it. Look at your own trading experience. Do you go to a chat room or a trading room every day or a signal service, or do you wait for every bit and piece of news to come out before you can make a decision on how to trade? Well, this is the way most traders trade, and this is, in my opinion, why most traders fail. What we try to do is supply you with the techniques and the knowledge needed so that you can make your own trading decisions. Now, I know exactly what many of you may be going through because I struggled my first couple of years of trading. I started trading on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. A specialist was simply someone who made markets in roughly about 50 stocks. So if you wanted to buy or sell a particular equity or an issue, you had to go up to the trader who specialized in that market and made the markets in those stocks, the bid and ask. I did that for 9 years. During the crash of 1987, I was trading on the floor, and I left the floor in the mid-90s to teach and to pursue trading in all different markets as well as manage money. About 8 years ago, I teamed up with Pro Trader Strategies, and we formulated Specialist Trading along with them. And so that's what we do. We just educate and try to pass on the knowledge I've accumulated in 4 decades so that ultimately you can make your own trading decisions. It's all about putting you back in the driver's seat so that you can be in control of your trading destiny. So this is what we do. Even in our free webinars, I will give you 2 or 3 different techniques today that you can start using as soon as we can finish today for your pullback trading. But as always, before we do, I ask that you please take a moment to view our disclaimer. We are required to show you this, so please take a moment to view this. I'm going to show you a lot of performance results in which I feel is the correct way to trade pullbacks, but please remember that we can in no way guarantee that any of the results I am about to share with you will be repeated. So once again, as you're taking a brief moment to view our disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. You may want to copy down our handle there at SPCLSTTRADG. I post different information on a daily basis, anywhere from financial wisdom to signals that our strategies have generated. So there's a lot of great stuff there, free, although rather limited, but feel free to follow us on Twitter. Okay, so as I stated, we are about teaching you. So here's what you're going to learn today. But before I share what we're going to be going over in today's class curriculum, once again, since this is going to be conducted like a classroom, I invite you to ask questions, but please wait till the very end of today's presentation to ask any questions. Oftentimes, if a question is asked, it will be answered actually on the next slide. And I have a lot of great free information to give to you today, and I don't want to bog down the class by stopping every couple of moments to take time to answer a question. So I promise I'll get to each and every one of them. Just kindly wait till the end, probably about another half hour, and then we'll go through all the questions, okay? The only question I will answer is the most common one, and that is this being recorded? Yes, we record all of our presentations. If you have to leave early or if you're having technical difficulties, you can go to Pro Trader Strategies, and they will send you a link to this recording, okay? So if you happen to join us late, remember, keep all questions till the very end. Okay, let's start. Now here's what you're going to be learning today. We're going to talk about how most people trade pullbacks. Myself included, when I first started trading, this is the way I was taught, and this is the way I first began to trade pullbacks with my own trading. And then I'm going to share with you a simple but high probability technique for trading pullbacks in virtually all markets and in virtually all time frames. Okay, so it really doesn't matter what market you trade, what time frame, if you like to buy only or sell only, it doesn't really matter. If you trade options, if you trade currency pairs, I'm going to show you where these setups can be generated in all markets and all time frames. Okay, let's start out by just giving a brief refresher course on what an uptrend is, because in order to trade pullbacks, you have to be in sync with the overall trend. Now, this is an ideal chart of what an uptrend would look like. And a lot of people think uptrends are straight up markets, but they're really far from that. They're more like stair-step progressions. So you see we go up a little, we sell off, then we go up a little bit higher, then we sell off. This is the way most trends appear. And it can be the same way on a downtrend. It makes no difference if we're going up or down, it's still a trend. And downtrends are the same thing, they're just upside down, where you're going lower, you have a brief pause to the upside, and then you go lower again, and then go back up before you go back down again, okay? That's standard and a very idealized way of looking at trends. We wish they were all that simple, right? Now, this is the way most people will trade pullbacks based off of these trends. In an uptrend, you'll have some parameters when you have that counter trend. In other words, you're going up, but then you have that little sell-off, that little stair step to the downside. So what you'll have are some type of parameters based off of, let's say, the institutions, or let's say based off some Elliott wave number, whatever it is, which is telling you where that sell-off will stop, and that's where you get in and buy, and then the trend resumes to the upside, right? That's very easy. That's the standard way of trading pullbacks. And it's the same way with downside. You'll have a strong move to the downside, and then it'll be followed by a counter trend to the upside, all right? Based on your parameters of how high it should go. Maybe it's based off price, maybe it's based off parameters on some type of Fibonacci, whatever, but that's where you meet, and then all the conditions are met, and you decide to sell, and then price goes lower, okay? This is a best case scenario. We would all love it to be this simple. Unfortunately, it doesn't always work this well, because oftentimes we will use the exact same parameters to buy in an uptrend. After all, it worked before, right? Everything worked. The institutions were met. The volume was perfectly. Say we came exactly to a support level. So you step in and buy, and it goes lower. And you're stopped out with a loss, or else you're hoping and praying for it to go back up. And it'll be the same way to the downside. You have a downtrend. You had a perfect example where it worked perfectly before. So when the same parameters are met on the next little bounce to the upside, well, you decide to sell, and you hope and pray that it's going to stop there, but it doesn't. In fact, it keeps going higher. Does this look familiar to anyone? I know it does to me, because when I first started trading pullbacks, this is the way I used to trade. I'd get a couple of good trades, and then every once in a while I would have a major loss where I'd give everything back. So let me share with you some of the things I used that I found no consistency in when applying to pullback trading. First one was support and resistance. I know so many traders trade off support and resistance. I know there are a lot of courses out there, a lot of webinars based on support and resistance. And there are some good traders who are able to trade very well based on support and resistance, but they are probably the minority, because support and resistance, I have found, is extremely subjective. In other words, one trader's support is another trader's resistance. Let me show you what I mean here. As we look at this generic chart, this is a perfect example of what you want to find for support. We're in a nice uptrend. We have the basic support here at the bottom, and as we go higher, we come back, we pull back, we have more support. So these are two good support levels, meaning that either the institution's volume came in, or there's some type of buyers around there. So that's where you want to buy, right? So let's say you place your orders based on those so-called support levels, and look what happens, okay? Once again, I know of some traders who trade very well using support and resistance, but it's extremely difficult. Probably only 1 to 5% of the traders I know are able to actually trade it well. I'm not included in that group. I have a very difficult time, because when I think there is support, it never holds. Now, another way to trade is by Fibonacci levels. Once again, a very common way to trade. So many people are always using Fibonacci levels, saying this is where it should stop, this is where it should pull back, okay? There are a number of great traders who can trade very well using Fibonacci. Once again, probably 5% of all traders, myself not included. The rest of us have a very difficult time because they're too subjective. Here is a common example here in this generic chart of using the 50% retracement level, probably the most basic of all Fibonacci type of patterns. And what you look for is for some type of trend to be established. In this case, the trend was to the downside. And then Fibonacci says we will come back and retrace 50% of that level. Okay, so you take the top of where the sell-off began to where the bottom of the sell-off was, and then half that distance is where you should stop. So let's say you placed an order here, and guess what? It worked great. Okay, so you're excited. Fibonacci is working perfectly for you, and now you have an even longer downtrend, and even a more substantial move. So you're going to base the same thing off your next sell once we go 50% to the upside, which would be right here. So you sell again, all right? You've got a little cushion now because you got some really nice profit made off the first one. And this time you give away all your profit and you lose even more, okay? This is the way most people trade and base their pullbacks based off of. It's off of basically trying to hope and pray that they're going to stop at these levels. Either you're going to be stopping at some type of support level or hopefully stopping at some type of resistance. But it's very difficult to trade for the masses. Now, here are incorrect pullback entries in my opinion, because entering a trade based off support and resistance and or Fibonacci levels is similar to picking tops and bottoms. Basically, you're trying to pick a top or a bottom and you're hoping and praying that it stops there. These are extremely difficult techniques to master because they are very subjective. Okay, as I stated, I've always had a very difficult time trading this way. The majority of people I know who trade them have a difficult time. And therefore, I have found no consistency in trading these methods or most of the conventional methods for trading pullbacks. Now, if we want to trade pullbacks correctly, in order to have a high probability pullback entry, one must first wait for a confirmation that the pullback has concluded and that the market is headed back in your desired direction. You see, the other way, the way most people trade is you're waiting for price to go up, and as it goes up higher and higher, you're basically standing in front of a speeding train and saying, it's going to stop right here. And you're just hoping and praying that it does, okay? Whereas when we use confirmation, we're not trying to pick a top or bottom, telling the market where it's going to stop. We're going to wait for the market to tell us, to confirm that it's headed in the desired direction. So if we look back at our generic charts here, instead of using parameters that we hope will work once again the way they worked here, instead of hoping and praying that if we buy here, they're going to hold, let's wait for the market to tell us that it's going back that way. So we wait for a little confirmation, and then that's when we get back in. And hopefully we'll have a nice move to the upside because the market told us that it was going higher. Not some guy in a chat room or not some outside source telling us that the market was going to stop here. We only listen to one thing, that's the market. And in this case, confirmation tells us that the market wants to go in that direction. It's the same way with downtrends, all right? The parameters work perfectly the first time, okay? And we're hoping and praying that they're going to work again because we really don't know that they're going to stop here. Rather than just place an order blindly and hope that it's going to stop, let's wait for the market to tell us that it wants to go lower by confirming that it goes a certain distance to the downside. Then we jump in and we have a higher probability that price will go in our direction. You see, it's similar to waiting to catch a train. Let's say you're at the train station waiting to catch a train that'll take you from point A to point B. So you're waiting at the train tracks and you see a train coming down the tracks, but it's headed in the exact opposite direction of where you want to go. Now, obviously, you wouldn't jump on that train, right? Because it's not going in the direction you want to go. But that's the way most traders trade. They'll jump on the train even though it's going in the wrong direction because they're hoping and praying by all the courses and all the money they spend, it's supposed to stop here, right? All right, but most of the time it doesn't. What you want to do is wait for a train that's going in your desired direction. That's the one you hop on. That's the one with a higher probability that's going to take you to point B. It's the same way with trading. We want the confirmation that we're already going in the right direction. All right, so what are the most common types of confirmation? Well, here are three that are very generic and you can actually start using as early as today if you like. They have a certain level of consistency, not tremendous, but we use these in some way or another in some of our methods. And so they are, number one, price trades above the previous bar's high or low. So in other words, let's say you're in an uptrend and you have a pullback to the downside. Instead of blindly placing a limit order, you're going to wait for price to trade above the previous bar. That will tell you that we're going in your desired direction. Or number two, a candlestick pattern. Many times candlestick patterns are perceived as reversal patterns. So in other words, it's like they reverse, they hit a bottom and then quickly reverse to the upside. So that's telling you that perhaps we have changed trend and the trend is now going back in its presumed direction. Or lastly, you can look at an indicator. An indicator will tell you that something bottomed out, and then you have confirmation that the indicator is telling you that we have reversed. Let me show you what I mean here. Here's a generic chart, and let's say that your analysis, whatever you're using, says that, well, we're in an overall uptrend. All this sell-off is just merely a pullback in an uptrend. So I'm not going to look for this to sell. I want to buy. But rather than just use, some limit order to blindly place in here, and let's say you wanted to buy somewhere around here and it went lower for the next week and you got scared and stopped yourself out, we want to wait for confirmation. One of the ways we could wait was to be waiting for price to trade above the previous bar's high. So if we want to base our pullback off this level right here, we're waiting for it to trade above this bar, okay? Or we could use a candlestick pattern. All right, this is a candlestick pattern. This is a bullish engulfing pattern, often used as a reversal pattern. So that would give you a very nice wave of confirmation that we're perhaps stopping. Or lastly, you could use some type of overbought, oversold tool. In this case, we're using just a standard slow stochastic. And this indicator would tell you that you're in the oversold area. There's no reason to buy until the bars cross and we go back above the so-called oversold threshold. Okay, so they would all concentrate roughly around these last areas right here. And as you can see, worked very well. Whatever we're trading here went back up because we had confirmation by either using these methods. Now, these methods, as I said, are all good. They're all very generic, and you can start using them as early as today. And they have certain levels of consistency. But remember, at specialist trading, we want to give you the best of the best. We want to give you something that has a high level of consistency, that has stood the test of time, that is something that has sustained traders, not just weeks or months, but years and decades. And this, in my opinion, is the correct way to trade pullbacks in all markets, whether they're slow or volatile. And you've heard me speak about this before. This is by applying the PET-D. It is probably one of the most powerful tools we have at Specialist Trading and Pro Trader Strategies. I use it on a daily basis. I was using it before we began today's presentation for trading today, and it really helped me with that nice downtrend we had after the first hour of trading. And what it is, it's a proprietary Colorbar algorithm. I was first introduced to this tool roughly about 4 decades ago on the floor of the stock exchange. But at the time, we had to calculate this by hand because it's a formula based off certain, momentum tools that we have to calculate. And it was very difficult. But because we have programmers now and high-speed computers, we were able to make it into a proprietary Colorbar algorithm. So now there's nothing for you to calculate or formulate. It's all done for you. As you see here, if you have a series of green bars, you're in an uptrend. That's it. There's nothing you have to calculate. There's no higher time frame you have to look at. There's no patterns you have to look at. You just have to look at the color. If you have a series of red bars, it's in a downtrend. I would have loved to have had this 40 years ago, but unfortunately, I had to calculate it by hand then. But this is what we've done for you. And let me show you how you can make it work for trading pullbacks. All right, so let's say we have a buy pattern. In other words, we have an overall uptrend, and we're looking to buy a pullback. All right, so in an uptrend, you're going to see a small amount of red bars. They're going to appear. This is simply the pullback. This is not telling you that the trend has changed because the overall trend is up. It's just telling you that this is the pullback. Now, the next green bar that occurs is your confirmation that the pullback has concluded. Remember, we're looking for the market to tell us that it wants to go back up. We're not going to try and pick a bottom and say, well, this course that I spent $10,000 on says that, when the institutions and the volume line up, that's a bottom, and that's where we have to place our bid in there. That's silly. You're just picking a bottom, and that's like basically throwing darts at a chartboard. It's not going to make any sense. And you've seen through the examples that there's no consistency in that. So what's the one thing we want to listen to? Not an outside source the way most traders trade. We want to listen to the only thing we should be listening to, which is the market. Now, the beauty of the PET-D is that it's a translator. It's not a predictive tool. It won't tell you how high or how low something goes. It's just translating what the market wants to do because we don't understand the language of the market. Most of us think it speaks another language. The beauty is the PET-D can translate it for us through this Colorbar algorithm. All right, so if we look at this older chart of Facebook, the overall trend is up. The majority of the bars are green, and we start to roll over. Most people would think, well, we've topped out. We're going to make new lows, and we have some red bars here. This is just the pullback. Now, on the very first green bar we see, which is right here, that's our confirmation to get in to buy. And look what happened. See how simple that is? There's no Fibonacci levels, no support and resistance, no volume, no institutions you have to track. You're listening to the market, not these outside sources that show no levels of consistency to them. Now, we can just reverse that if we're in an overall downtrend. Let's say we want to sell in a down market. So in a downtrend, you're going to see a small amount of green bars. This is just simply the pullback, okay? Now, the next red bar is your confirmation that the pullback has concluded. And now, if you'd like, it's time to get back in because the trend will resume to the downside, most likely. Not guaranteed, because we don't guarantee anything. The market is not a guaranteed instrument, but we're just trying to get as much as we can by just being in sync with it. So the market is being translated through the PET-D that most likely it wants to go lower. So as we look in this 5-minute chart of the E-mini, we see that the overall trend is down. We have 3 or 4 green bars. Is this the bottom of the market? Well, we don't know yet. We have to wait and see. If we have continuous green bars, well then obviously yes it is. But we only have 3 or 4 yet. It's not enough to tell us. And all of a sudden we have the first red bar. So that's our signal that confirmation has begun, and most likely we're going to head lower. Excuse me. So as we can see, look what happened. So you can intraday trade this as well. And don't worry if you miss, if it's a well-established trend, there are many more signals generated along the way. Okay, so that's the basic premise for trading pullbacks, okay? Excuse me. We're not going to rely on conventional wisdom that tells us, well, oh, okay, this is support based on some convoluted logic, or this is Fibonacci based on some convoluted logic. We know that we're not that smart. I mean, those are very difficult things to discern. We want things that are cut and dry, that we don't have to sit and calculate and hope and pray that they work. We want things that we can just see that, wow, that's a red color, okay, I should sell. It's a green color, I buy. It's that simple. This is the way I've been trading for 40 years, and it's sustained my trading, so why should it have to be more difficult than that? All right, so let's look at that original chart of Apple I had shared with you. Remember, most of the support and resistance people would say, well, there's major resistance here. It looks like Apple's going much lower at the beginning of December, so it's most likely a sell to me, okay? I would most likely sell this. But if we apply the PET-D, we see that it's in an overall uptrend, and we just have a few red bars, and then it's met by the first green bar. So what is this telling us? Should we be selling Apple? Absolutely not. We should be looking to buy. That's our first buy setup, and look what happened to Apple. We had a very nice run up to the upside. Now, had you missed that, don't worry, because the trend was still strong. I know a lot of people would say, well, Steve, this is where we have to stop. So this is the major resistance. The course I took on support and resistance says that all the institutions are selling here. So this is probably a nice top for this stock. No, it's not. The majority of the bars are still green, and we have our first green bar after a series of red bars. So this is still a buy. And you can see Apple continued to go up, and I believe it continued to go up even higher today, okay? Now that was just a month ago. Let's look at ESRX. This was coming into just about 3 weeks ago. Someone looking at this will say, well, obviously the overall trend is down. We had a really sharp move to the downside coming into the new year, but now it looks like we've bottomed out. In fact, we may have made a double bottom here, okay? Some very good support. We've held there, and we're starting to move back up, so it looks like we're going higher, right? Well, if we apply the PET-D, we see that the majority of the bars are still red, and we've been introduced to our first red bar. So actually, this has just been a pullback the entire way. We have not been in any type of an overall uptrend. The overall trend is still down, and this is our confirmation that we're going lower. And just about a week or two ago, coming into this first week in February, look what happened to the stock. It's been down 5 points, okay? Now, once again, we're not listening to any news. we don't concern ourselves with outside sources. If you recall, at the very beginning of this presentation, it's been my experience in nearly 4 decades of trading that the reason why most traders fail is because they base their trading and their setups off of outside sources. You're listening to someone or something else tell you how to trade. What's the perfect market? What's the perfect time frame? Where should I enter? Where do I place my stops? Okay, we're giving you just high probability entry techniques and strategies, and we give you them, but then we work with you to mentor with you so that you can adjust them to meet your needs, because ultimately you have to make the decision, not us. All right, let's look at this obvious downtrend in CVS. Okay, this was last November. Now, obviously we're in a downtrend. How could we have taken advantage of this on all these nice little pullbacks to the upside? Well, we apply the PET-D, and every time there was a green bar followed by a red bar, those were our sell signals. So we had 4 chances to go short, okay? Now, the stock didn't really fall out of bed, but ultimately, because we were in an overall downtrend, we weren't trying to pick a bottom based off of any support here or institutions holding it up. We are going with the flow. Look what happened. Stock gapped down 20 points to the downside. You see, we were only listening to one thing, the market, and the PET-D was translating that we wanted to go much lower. As long as the majority of the bars were red, we're going lower. How about KLAC, once again in November, December here? We're obviously headed upward. We have a nice uptrend, but it's not very strong, but it's still a mild move to the upside. How could we have taken advantage of this? Well, we apply the PET-D. Obviously, the majority of the bars are green. Every time a red bar appeared, we looked for a green bar to follow it, and we had 3 buy signals here. Not a lot of movement to the upside, but based off of the first signal, had you held on to the trade, well, it eventually kicked in, and that's 12 points in just about a month's time, okay? Now, if we look at Amgen, here's a perfect example of why we don't base any of our trades off of outside conventional wisdom, things that don't work over time where there's no consistency. I remember at the time, this was last October, a lot of people were saying, well, there's major support here. We've made a double bottom. Amgen should be bought here. This is a good stock to hold on to. Fibonacci, support and resistance, the volume, all the institutions were buying. The first thing I tell my students and members is there's no requirement to even listen to those things. I haven't listened to those things in 40 years, so there's no reason why you should. And all we listen to is the market. So what was the PET-D translating for us? Well, we applied the PET-D, and the majority of the bars are red. So the market was saying it's not going higher, it's going lower. And in fact, we had 1 green bar followed by the first red bar. And so we actually had a sell signal where most people were buying based off that double bottom. We were selling, and look what happened. The stock fell 32 points coming into November and December. Now, a lot of people like to trade ETFs, okay? And we can say, listen, you can use this to either trade ETFs or you can use this technique as a market timing tool. Let me show you an example here with an older chart of IWM. That's the ETF for the Russell 2000 index. As we can see, once again, some would say, well, there's major support, Steve. That's saying that the Russell is probably bottoming out. You should be a buyer around that support level. But if we add the PET-D is translating that it's actually in a sell mode, and that you should be selling right here because most likely this is just a pullback. This little ledge we've had here has not been any type of support. It's been just a ledge or a bounce before we head lower, okay? So even if you don't trade this ETF, the IWMs, you could use this as a market timing tool. And if you're getting a sell signal in this, well, most likely the market, the Russell, will be going lower. And it did. The ETF went down 6 points in the next week or two, which translated into hundreds of points in the actual index. Now, a lot of our members and students like to trade options. Even though I'm showing you stocks, you can still trade options off this if you'd like. Just, trade however you like. If you like to trade some option strategy, or if you just, want to just buy the calls or the puts, it's up to you, but you would still take the same setups based off of the tradable unit. In other words, based off of the equity. Now, what we suggest to a lot of our option members is to go for that bigger, gain, because many times, with if you're looking at the daily bars, you'll get maybe 2 or 3 points, but that won't translate onto large gains on the option. So we advise to go to weekly charts. Remember, this technique can be applied to any market, any time frame. As we look at this weekly chart of Facebook coming in to February of this year, these are all weekly bars, and obviously we've been in an overall uptrend. Now, for trading pullbacks, though, on a weekly basis, here's where we'd like to buy. Here on this pullback to the downside, and here, because obviously they were just pullbacks before the trend resumed higher. So how could we have taken advantage of that? Well, all we have to do is apply the PET-D. All right. Once we apply the PET-D, we just use the same technique I've taught you. The very first green bar is our buy. All right. So in July of last year, you could have purchased options, and you had 15 points to work with in the next 2 or 3 months. All right. Now we had another sell-off here in an overall uptrend, and another buy signal right here. This was actually in December coming into January of this year. And as you can see here, you've had 10-point gains since that. So it doesn't matter if we're using daily bars, intraday bars, or weekly bars. Here's another example in WIN. Now, this is an older chart, and obviously looking back in hindsight, we were in a major downtrend. How could this same technique have helped us if we're trading options on a weekly time frame? Well, obviously all the bars are red. In fact, as far back as way up here, the PET-D was translating that we're going lower. Why? Because the majority of the bars were red. And then as you see, the bars after green were your sell signals. Had you taken this very first one, it's 125 points to the downside, okay? Now, one more thing we suggest to a lot of our members is that to trade higher price stocks. This is entirely, once again, up to you. You're the decision-making process, not someone or something else. These are just suggestions that we give our members. But as we look at this higher price stock, Google, it's a $600-700 stock, but the same technique will apply here, all right? Google is in an overall uptrend in November of a year ago. As we see here, here's the first green bar. That's our buy setup. And the very next day, the stock gapped up, all right? It wasn't as if we knew anything. It wasn't as if someone told us that there was some major news coming out in Google. We have no idea because we don't follow news. There's no need to. The PET-D told us the day before to go long. So why would you have to follow the news? I stopped following news 40 years ago, and I'm still here. So why would you think you have to listen to news? So the PET-D already told us the majority of the bars are green. We're in an overall uptrend. We just had 2 down days and then followed by 1 green up bar. That was your signal to buy on that day. And look what happened. And don't worry, if you missed that setup, well, you got another one right here, and you could have taken advantage of the nice up move. Okay? Now, that's for option traders if you like to trade higher price stocks to get those nice big moves. Now, a lot of people say, well, Steve, I know you don't listen to news, but news, negates everything, because if you're long and some bad news comes out, it's not going to work in your favor. Obviously, I agree. If you're on the wrong side of some news event that was unforeseen, it's going to hurt anyone. It doesn't matter what technique, whatever you're using. But it's been my experience that oftentimes, not guaranteed, but oftentimes the market tells you in advance before news comes out. Just the same way there was some news announcement with Google where the stock gapped up 50 or 70 points that the PET-D translated the day before. So not guaranteed, but oftentimes you will be on the right side of the news prior to the news being announced. Let me show you what I mean here. This is an older example, but just to show you how powerful this technique is. This was something that happened a couple of years ago, a year and a half ago in the stock market. The stock market dives 1,000 points in early trading. I don't know if you remember that, but on that particular day in August, the market plummeted at the opening today with the Dow Jones Industrial Average losing more than 1,000 points, or 6%. Now, Wall Street had been bracing for a rough day after markets plunged again in China amid growing fears about China's slowing economy. So about a year and a half ago, a lot of people were worried that China was topping out, that it had gotten too big too soon, and that the economy was really slowing down. And the markets in China started to fall out of bed, which meant that our markets followed suit, and they really fell out of bed. This one day, we were down over 1,000 points in the first 3 or 4 hours of the day, okay? A lot of people say, well, Steve, there's no way you can brace yourself and guard yourself against things like this. It's true, there is no way. But as I said, it's been my experience that oftentimes you are on the right side of news because the PET-D is telling you what the market knows in advance. As we look at the chart of the Dow, this is the diamond, which is the ETF, which is just the stock representation of the index. We see here that The news announcement came out this day, and as you can see, we were down 1,000 points and then kind of bottomed out here. But if we look back a full month in advance, the bars were already red. We had one green bar followed by a red bar telling us to sell. Then we had two more green bars followed by another red bar. So we knew well in advance that on the 11th of August as well as on the 19th of August to go short well before this sell-off happened. Okay? So don't let anyone tell you that the news will always affect your trading, because oftentimes what we have learned, what has been taught and handed down to me and a few other select traders, that the market knows in advance of news events. So, there's no reason, in my opinion, to even concern yourself with news, because the market was already telling me a week in advance to go short. So it wasn't as if I knew that we were going to be down 1,000 points in one day. I didn't. But the market told me what it wanted to do. All right, so let's recap. Now today I showed you how most people trade, myself included, when I first started trading. So I'm not taking myself out of that, that experience. I did the exact same thing. How most people trade pullbacks the conventional way, and how they will work. Sure, they will work every once in a while, and how there are some traders who are able to make some nice livings trading that way. But the majority of us, myself included, have a very difficult time, because probably 1 to 5% are only able to really make a living based off those conventional techniques, albeit support and resistance, Fibonacci, institutions, volume. They're too discretionary, they're too subjective. We need things that are more cut and dry, so that without a doubt that, well, that's telling you that you should be selling, okay? It doesn't mean it's going to be a trade that's going to make you $1 million, but you have a high level of consistency, all right? So this is what I taught you, a simple but high probability technique for trading pullbacks in volatile markets. Now, ask yourself honestly, do you think this edge could have helped your trading this past year? And we're coming into the second month of the first of this new year, 2017. The first month has already passed. How was your first month? Did you do well with your trading? Okay, is it anywhere where you thought you'd be on January 1st? We're already on February 1st, so you have to ask yourself, could this have helped you this past year, or perhaps even this past month? Okay, remember, we are an educational company. I'm not going to sit here and tell you that every strategy, every signal will generate thousands and thousands of % gain. What we're trying to do is pass on things that have worked and have stood the test of time. It's been my experience that when I used conventional wisdom, when I first started trading, all the things that I had been taught and all the seminars I took and all the books I bought and all the tens of thousands of dollars I spent, it was my experience that there was no consistency. But ultimately, I was able to have some mentors who were traders on the floor who saw how much I was struggling, and they taught me these same things that were able to turn my trading around. And these are the same things that I teach to all of my students and members in over 110 countries around the world and in virtually every state in the United States. So if these things have been able to sustain my trading for 40 years, I really think they'll be able to sustain your trading, so that you won't be able to do well for maybe a couple of months and then give everything back. My goal is not to trade for you, but my goal is to teach you how to trade with the specialist edge. This is the same edge that was able to turn my trading around, and hopefully it will turn your trading around. So here's the special we have for all the people in attendance today. We're going to offer you our Pet D package, okay? This is what we feel is a true roadmap for any market. It comes with a proprietary Colorbar algorithm, so you can download it onto your charting software, and you'll be able to see the colors turn from green to red. All right. It also comes with 2 continuation trading techniques, 2 pullback trading techniques, as well as a trailing stop technique. All right. And as well, I want to stress that this can be applied to other markets. I know we have people that like to trade commodities. So as we look at this chart here in crude oil, don't you think you could have done well using the same technique I shared with you today? Same Pet D, same overall market technique I shared with you today as applied to crude oil. Okay. How about a monthly chart of the U.S. bonds? All right, we look here, the overall trend is up. We have 2 down days in red, followed by 1 green bar, so that's telling us to go long, and as we can see, bonds went up the next month or so. You had 2 chances to go long bonds. But what if you're an intraday trader? Well, last year, here's a 5-minute chart of the E-mini. As you can see, the majority of the bars are green. We had a really strong uptrend where most people would be saying, well, it's time to sell. This thing looks like it's topping out. We had a pullback trade here, a confirmation with one more green bar, and we continue to go up higher through the end of the day, another 8 points or $400 per contract. Sometimes you get these really nice moves. Here's a 10-minute chart of the E-mini last year. As you can see, the overall trend is down. We have a few green bars followed by the first red bars. Had you sold on that, you could have been able to take profits of up to 18 points by the end of the day, or that's roughly $900 per contract. And this just happened this past week, a 10-minute chart of the E-mini. We had a really nice gap opening to the upside, where most people would think, well, you know, we have a top here, and then we have another top here, but it wasn't qualified, so this is showing a discrepancy. I'm going to sell here on this nice bar down. This is the way most people trade, okay? You know, they'll look at the volume and say, well, the volume was very strong here, and then the volume was very low here, so we, you know, we have a divergence. Or let's say all the institutions are selling right now, so this is what I like to follow. This is the courses I've purchased for $10,000, so this is what's going to work for me. Remember, that's silly. You're listening to outside sources, and these outside sources have no higher levels of consistency than you or I. It's the market that we should be following, not someone or something else. And right here, the market told us just last week that you should be buying, okay? So if you would have stepped in and bought, well, it's another 6 points or $300 to the upside, carrying over to the next day. This was just last week. I'm sure there was a number of examples today, but I just didn't have time to take examples that were that recent. This can also be applied to weekly charts of currency pairs. All right, we haven't talked about the Forex markets. Here's a weekly chart of the Canadian dollar. Obviously, the overall trend is up. We have the first green bar, and after that, it was 1,400 pips in the next 6 months. That's roughly $14,000, okay, if you're investing in currency pairs. Or on a daily time frame, we have a overall downtrend. We only have 3 green bars followed by the first red bars. If you would have sold $1 yen, well, that's 500 quick pips to the downside, roughly about $5,000, okay? So this will work in any market, in any time frame, and in any direction. So if you like to trade multiple markets, it's great. It's not like you have to buy a different program for each different market you're trading, okay? This is something I wouldn't be caught trading without. I have used it on a daily basis for going back 40 years, and it has made all the difference in my trading. I believe it's one of the main factors that has sustained my trading for 40 years. Now, something like this, I've seen similar packages cost anywhere upwards of $10,000. Here's what we're offering all of our attendees today. We're dropping this price down to $29.95, but we're also offering payment plans. And this is for a limited time only. So for you know, a small deposit, you can be up and running and have a payment plan established, and you can be trading with the PET-D as early as today. Okay, so even if you don't want to come up with $29.95, you can put down a small deposit and you can be up and running ASAP. So here's how to take advantage of this. And one thing I didn't also mention, as you see at the very bottom, the last category here is mentoring correspondence. You will be in contact with me as long as you like. You know, this is not something that only lasts a couple of weeks. As long as you're a member of my courses, you can email me and ask me any question you'd like. So you're going to have someone there with you every step of the way, mentoring you the same way I was mentored. And you, any question you may have, you don't understand something, or you have an idea, or if you're you know, having difficulties understanding the techniques we give you in the course, don't worry, I'll be there with you every step of the way. You can contact me and email me whenever you'd like. So you have someone who has used this tool for 40 years, who is right there, right next to you as your personal mentor. Now here's how to take advantage of this great deal, okay? Once again, contact Pro Trader Strategies. They're my sister site. They handle all of my marketing and promotion of my courses. And you can email them at trading@protraderstrategies.com. Or probably, I would suggest the best thing to do is to call them directly at area code 310-598-6677. They have many trading consultants manning the phones. They will answer any question that you have. No obligation, you know, no purchase required. You can just ask them more questions about the PET-D, and they will like to answer anything you may have, and also put together a payment plan for you. So if you want to come in with a small deposit, call them directly at that phone number, and they can answer any question you may have, okay? I'm going to leave all this information up here for you on the screen while I open up the question and answer box. And thanks for holding off on any questions. And let me answer them right now. First question by John. He says, do you ever get false signals? Sure. I mean, John, I think I said in the very opening, nothing is guaranteed 100%. And in fact, if any educator or any course tells you that you're guaranteed to make money, I would run. Because that's like, a coach guaranteeing that his star player is going to make a basket every time he shoots or is going to hit a home run. I mean, that's silly. Or every entertainer is going to have a hit album or a hit movie. I mean, there are plenty of superstars that have clunkers every once in a while. It doesn't mean that they've lost it. It's just natural. It's the same way with trading. Every once in a while, you will have these small minor losses. But we also teach you about proper stop placement, proper money management. Remember, I said in the course, we show you how to use the PET-D as a stop technique. So a lot of times it can protect you as well as keep you in trades a lot longer. So yes, I mean, if used properly, this will, keep you out of trouble, and we show you different ways to protect yourself, okay? Let's see. Now remember, the PET-D is based off momentum. The reason why we don't divulge it is because it is basically something that we've had a lot of interest in, where a lot of people are thinking of possibly purchasing it from us or licensing it out. And so we've had hedge fund people interested in this. So we want to still keep it for you, but if we give it away, we've pretty much given away the value. But let me just share with you, most people say, well, why would I use something where I don't know what it's based off of? I can tell you it's based off momentum, but I think the problem that most people have difficulty with is that they think that once you have the color bars, that's all you need. The real value of the PET-D is in learning the process of how to apply it properly. You see, that's the value. That's really what you're paying for. You're paying for someone who has been using this for 40 years. It doesn't matter if it's a black box, because I can almost guarantee you, if you knew how to, what the formula was, and if you knew and you just had the PET-D but didn't know how to trade it, but you just had it to access, I can almost guarantee you'd lose money, because you wouldn't know how to use it correctly. And you would most likely use it as some type of a system or strategy, and that's the entirely incorrect way to apply it. So what you're really paying for is not, figuring out the calculation for the PET-D. What you're paying for is someone with 40 years experience, someone with mentoring experience that can take you through the proper way to use it. That's the true value of this course, okay? I'm sorry, someone is asking for live examples. Unfortunately, this is a static presentation. This is a PowerPoint presentation. But if you contact Pro Trader Strategies, I think you may be able to request a chart from them if you like. But you've seen, I've given you just about every chart you can think of. I've given you daily bars in stocks, 5-minute charts in the currency pairs, weekly bars in currency pairs, as well as 5-minute, 10-minute charts in futures. So we've covered just about everything. If you're not convinced at how well it can work in any market or time frame, I don't think one more chart will do the trick. Just remember that it's something that I use on a daily basis. It has really helped sustain my trading. And I really think that if you're having trouble, struggling, I know what you're going through. I was there myself. And not until I was taught these same things that I teach to all of my students was I able to get my trading around and become a consistent trader. So this is what we're just trying to pass on to you. If you are still, hesitant and thinking like, well, I want to continue using the same stuff that I purchased before, ask yourself, how's it working for you? Are you anywhere near where you thought you'd be a year ago? Is it giving you winning trades on a consistent basis? If it's not, you're basically either just trading water or giving away your money. So try to learn something where you're going to be in charge of your own destiny. Remember, I said, my goal is not to force feed you signals. My goal is not to tell you what the perfect time frame is, what the perfect market is. My goal is to give you this information that has stood the test of time so that you can ultimately be in charge of your own trading. That, in my opinion, is the only way you will be a consistent trader. Not by relying on some, system that promises the world, or some guy in a chat room that says he knows everything about trading, or some news event that supposedly always produces a winner. It doesn't work that way. I've been here a long time, and I know what works in terms of consistency, and I know what doesn't. So if you're interested in turning your trading around, if you think this could have helped your trading this past year, I strongly suggest contacting Pro Trader Strategies, give them a call, and they can put together a payment plan. So for a small deposit, you can be up and running very quickly, and I can be instructing you exactly how to apply this so that you feel comfortable using the PAT-D, okay? So in conclusion, here's all the information you need to know. Contact Pro Trader Strategies at 310-598-6677. There is the link at the very bottom. Now, that's not a live link. If you want to go to the live link, if you look at the chat box in the far right-hand corner, they have posted a live link there under the Pro Trader Strategies title. So you can just simply click that on. It will take you to the sign-up page or the information page. But the best thing, in my opinion, is just to contact Pro Trader Strategies, and they can give you more information over the phone about some type of payment plan or just some more information about how to apply the PET-D and what markets you like to trade. Okay? I want to thank you so much in conclusion for coming today. Thank you so much. I hope you got something out of us, and I really look forward to you turning your trading around, but most especially becoming a student of mine and a part of the PET-D course for this upcoming new year. Thank you so much. I'll see you next time. Bye-bye.